share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I'm going to go through a number of things. I covered the Dow Yen in the Substack last night. I want to break down more of that scenario that I talked about last night. And also I want to go into the setup coming into CPI, and we'll go through individual stocks, and we're going to build a portfolio together. We'll see how this all comes together. Well, welcome everyone. This should be an interesting show tonight. I've got a couple things I want to cover. I mentioned in the opening comments that I'm going to cover the Japanese yen and the Dow yen specifically. When I did the research for the Substack last night, it was kind of eye-opening. I'm so used to just looking at the most recent times. It really gave a different perspective. So I want to go through that. We're also going to cover and go through the S&P and the NASDAQ, take a look at the interest rates very quickly just to set them up for coming into CPI that will be released tomorrow. And just we'll just cover the CPI scenario right now. CPI is, I believe, 0.4. Core is expected to be plus 0.3 year over year, 3.7 expected to drop a little bit. So we'll see if that comes in like that. I don't know if there's going to be a surprise there or not. The markets came back screaming today at the end of the session. Lots of short covering. They played with the market it was pretty weak most of the session, and then we saw that nice sharp back rally, and we'll talk about at least the technical and quantitative setup and see if we can determine what it's going to look like tomorrow. So let's go ahead and talk about just a couple things here on the whole scenario around CPI and the rate cuts and all these things that have been programmed in that are starting to fail. And I kind of look back on some of the comments that I made. I'm really happy about having the Substack now. It's a lot easier to go back and see what I said. Was I right? Was I wrong? What do we need to cover differently or update? Those kind of things. So I have a reference. I think I'm around 80 newsletters already since I've started that. So just a quick advertisement, kendallreport.com/newsletter, or you can go to kendallreport.substack.com. They both take you to the same place, by the way. So, but one of the things that I'm seeing unfold here from I would say from a backdrop and the noise that's in the markets is nobody seems to have a real solid idea or opinion that I'm seeing anyway. I don't read a lot of stuff, but I do go around primarily news lines and things of that sort looking for any kind of breaking news, and sometimes we'll see comments from Fed talking heads with presidents of different banks voting or otherwise. And a lot of times what I see when I'm looking at this is there's some directional or maybe some hidden messages. And I look at what's happened in the treasuries, and we'll go through those as well just briefly tonight, is they really have been able to stay in the range, even though it looked like we were printing up. All of a sudden we're starting to fall back into range. I think the next couple weeks in treasuries is going to be real telling, and most likely whether the CPI and the PPI are enough to change the directional movement on this market or get some, let's say, consensus or some kind of trade flow going that is going to push the market up or down, whether the selling pressure that's been in treasuries will continue or it'll debate and start to go down over the next several weeks. So the algos are suggesting the latter. But I don't have a lot of notes here other than that. So let's go ahead and let's flow through the indexes. Oh, one last thing. We are going to build a portfolio tonight. When I tell you folks, okay, hopefully by the time I'll have to repeat this when I get done, but I'm going to build a random portfolio from the stocks that you folks are going to give to me. Do not give them to me now because they're going to get buried on the chat line, so I'll have to scroll through them. But what we'll do is we'll actually go and build a portfolio on those stocks that'll give me the ability to just see what kind of random portfolio we come up with. But I can go through the list and we can go through step by step on a lot of these stocks. And I'm probably going to go for about 20 stocks. So you can give me your best or worst. It's up to you. Not trying to, just give me whatever comes to mind and what you're interested in. So let's go ahead after that. Let's go ahead and let's look at the S&P. We'll do S&P, NASDAQ. We'll touch on the treasuries. I'll come back up and talk a little bit about this dollar yen situation. And the headline last night was, can the Bank of Japan actually really, blow up the entire international markets on trying to solve things? But very interesting, I think, conversation I want to have with you tonight. So let's go ahead and get in the S&P. I'll come back, a little dialogue on screen, and then we'll go through the dollar yen, and then we'll go straight into building a portfolio and talking stocks the rest of the show. So let's go ahead and go to the S&P. All right, so the short-term charts couldn't be more boring. If you look, one of the things that I've been talking about, just trying to get it scaled, we've been closing right on basically the 10 and 21 period moving average. They're almost exactly the same right now. You see that those averages 51.76, and let me just get the values here. I got the wrong value. 52.58, 52.66. So they're very tight in that range. If you look at the close today, we rallied back after being down to the 52.08 level. We rallied back all the way to 52.60, and we're right in between the 54 and 66 were those two moving averages. So we came right in there. You see the last 4 sessions, no matter where the market flowed, we ended up back at that same point again. And we are seeing the algos trying in the next couple of days, maybe on Thursday and Friday, turning up. It doesn't really look like there's any drastic move coming from here. So the only thing I could say about this whole pattern that we're seeing is that it looks like the CPI and PPI are going to be somewhat of a non-event, and maybe we're going to be able to see it move higher again. We continue to see this very, very choppy range. And as I've been talking about, we didn't cover the database because I don't have the update. So if you want to see the database and all the commentary around what I'm seeing happening there, then I discussed that in the Substack as well. And just for the record, it's $8 a month, and it's not a lot for the premium, but it does. I'm building up a decent number of subscribers now, which is going to enable me to parlay that money into some other things that's going to help the channel. So that's the real goal from that standpoint. So, but looking at this S&P chart, just nothing there. Let's click over to the weekly just for a second. And weekly, I talked to you about this, I believe, on Sunday night, is really what we're seeing on the weekly is that we came almost down to the 10-period moving average, 51.80. That's the big number. If you recall, we have an outside reversal bar on the S&P, and we need to penetrate last week's low, which was, I believe, 91.50. So if we get below that low and we close lower on the week, then we'll have a confirmation of a intermediate reversal. And this came after making a new high. This would not only be a reversal, but a key reversal at that. And the key reversal comes from when it comes at a significant high. And an ATH high is pretty significant. So what we're looking at from the standpoint of the patterns that are setting up, we're looking to Friday to see whether we got those two rules have to be triggered, which is a lower low than last week and a close lower than last week. And the close last week was 52.53. So that's the big rule there. But looking at how everything's set up, we're seeing that the PPMs on a weekly basis are starting to fade. It does look as we go through the next several weeks, probably the most likely thing is a range between this, around this 51.80 up as high as 53 and change, and then possibly drifting down ultimately towards the 21 period moving average on a weekly basis. And that's right now, it's down at 49.68, but it's going up right now at about 30 handles per week. So in 3 weeks time, it'll be 100 higher. So we're going to get up into 5,000, 50 range. That's most likely where that's going to come in play, because what I'm talking about here is going to take a number of weeks to go through. Yeah, so looking at the NASDAQ, I'm going to summarize as I go through here. I'm not really seeing any major volatility or anything to come. I jokingly put out a headline the other day on Substack that was that, is it a crash or a rally going to come out of this? And it's literally a flip of the coin. But just like with the S&P on a weekly basis on the NASDAQ, we're seeing momentum actually drifting lower on an intermediate level. I'm still, when I mentioned the database on an intermediate level, I'm still expecting that we'll be able to get some selling to start coming into the WaveTech database on an intermediate level. And we can take a little more look at that. And yeah, I'll do a quick review of, we'll bring up the Russell here next. The one thing that is happening here on the NASDAQ daily is we're seeing a much clearer view that the algos are trying to turn up. All this is telling us these are not big rallies being forecasted, but they are telling us that we're going to stay above that 10-week moving average, 18,358. And we just look at some of the market grid numbers. You're looking at, let me just get this right. We're looking at 18,418 as R1, R2, 18,463. So let's take a quick look at the Russell. So Russell, not much more. It looks like it's trying to come back into the range. The 40 period moving average is the primary demand line. And by that, if you look at this cyan line that's coming through here, that is where the support has been. And we can go all the way back to February. And each time we see this pattern keep bouncing off of these levels. So the algos are very mixed. There's no trend here. That's something that I want to discuss here is none of these indexes, this trend that we've been in all year, but there's a slight upslope here. It's just really unorthodox, very sloppy, and very difficult to trade on a day-to-day basis other than day trading intraday. But to try to make the analysis, basically if you have a bullish stance and you hold these things and you're doing okay. But for the most part, even here, I'm going to go over to weekly on this chart. And the weekly, we got outside reversal there as well. Let me put the cash up here because it'll plot better. Yeah, you can see we still have upward slopes, though. This is what I'm talking about, especially weekly. we've got a nice angle of attack on the upside on the weeklies. So basically expectations still going up, maybe a sloppy sideways range. We could dip below the 10-period moving average. I do think that the 21 is going to come into play, 21-period moving average at some stage. So I've been discussing this in the Substack, is what we're on the 10-year, we're starting to see where we're likely to come back in a little bit. There's going to be solid support right at the 425 level. We've got these upward fib targets up here that we got close to. The first fib target is 4.57, and we printed up to the 4.46, so we're about 10 basis points from that level. And we are seeing algos, everything starting to suggest we're going to turn down, which I think is interesting as we come into CPI and PPI. The indications here on interest rates is that we're going to come down, even though we have those upward fib targets. If we look at the algos, look at what's going on with the PPMs, they're telling us that the trends are trying to soften here, and likely the key pivot point is going to be where the 21 and the looks like the 10 cross, which is 4.25, basically 4.25 with a extreme probably down to 4.15. We're just going to remain in this area, and we got a little more upside in yields than I thought we would get, but not by a lot. It's 4.33 number has been like a broken record for weeks from a key pivot level. So as far as, let's go to the daily here just real quick and try to get to a handle. You see daily basically almost gapped down this morning. So everything basically kind of reversed. You know, equity markets were trying to rally. Now they've come back. They came back down, and the short covering at the end of the session today. And so we're just seeing this sideways trading range. And if you're trading these ranges, I can tell you I had a really good day trading, because I was literally playing. I actually played both sides really well, but that dip down, there was some really nice indications. That V trade that I've showed everybody on the weekly Friday weekly lives, that was there today in a big time. It was a big trade that came out at the end of the session. You could have clocked in some pretty good money on that trade. But we look at back here on the interest rates, we're seeing even on the dailies, we're trying to get kind of a fade trade, which means that the rates are going to try to get down back into these moving averages, 431 min, but more likely this 427, 425 looks like a magnet where it just wants to come down. It's I'll use my favorite term. It's most likely a given that it's going to come back into that range. So this is why I'm basically telling you folks that there's probably not any big reaction coming out. Famous last words, you say something like that, then there's a big reaction. If there is a surprise, and like I said, CPI is expected to come in up 1 point lower on a year over year, which is 3.7. It was 3.8 last month. And as far as the overall scenario goes, I don't see this being impactful, but we'll wait and see how the markets act. Everything I'm looking at here, as we review the trades tonight, we're looking at really sideways, directionless trade, nothing, basically nothing to see here. And if the market can come up and there's some big surprise, then we'll deal with that surprise. But for the most part, even looking at not the WaveTech database, especially on intermediate, I mean, we're still long. Basically 9 out of 10 stocks were long out of every symbol in our database. It's pretty insane bullish right now on the intermediate level. On the short-term basis, we're only long about 3 out of 10. So we've definitely taken some money off the table on a short term, but the long-term intermediate continues to be reasonably positive. Okay, so let's set this up. I came back up on screen so we can set up and talk about this yen situation. I'm just bringing something up on the other page that I want to reference. And matter of fact, let me go over here. So let's talk. This was last night's Substack. And one of the things, I'll bring up some charts here in a second, but the most amazing thing that I just didn't have the perspective, and it goes back, if you go back and look at the long-term trends in the yen has been a monster bull market for a lot of years, and then once it got to a certain point, it just maintained this. And all we're seeing right now is a correction of basically almost a 40, 50-year trend. I'll show you in a minute. But it's interesting that because of what the Japanese have been doing as a strategy with keeping QE, keeping interest rates super low. As we know, they were the only bank that weren't tightening over the last year and a half. Now they're tightening, and everybody's talking about the West loosening everywhere else. And so what we might be seeing, and this might be a model, this won't be most likely the first time I discuss this, but this is possibly a model for keeping this low interest rates on for too long and see what the consequences are. Now they'd like to support the yen, but it's the opposite of the US. They've sustained such a crazy, I guess, premium in the world with their manufacturing presence and everything, especially 70s and 80s, electronics, cars, all that stuff was huge. And my thoughts on this is that they're losing some of that dominance, but because of the strategy of keeping rates so low, we're now seeing the potential for a reversal of fortune, so to speak. And that is, I guess, the question that I see here is, if they do not react appropriately, we're going to look at charts here in a minute, they don't react appropriately and they start to sell U.S. treasuries, treasury spike, it's going to be a double whammy, because they're going to try to do that to offset, and it's not going to work. So there's a good chance they won't do that. The disaster scenario that I painted in last night's Substack, which I put out for free to anybody. So even if you don't want to subscribe, you can just do a free subscription, and you can see which issues I do, multiple every week, some free issues. And last night I just thought this was something that I wanted everybody to be able to read and then see the value, because I've got some other things that are cooking in the background, that special reports that I ultimately want to put out. But this dollar yen situation is very interesting. So I'm going to go, first of all, I'm going to come back over to the Substack, and I'm going to put this big chart up here, and I'm going to use this for right now as a reference since it's already there. Now what I've got on here is I've got the market grid, the WaveTech market grid, I've got the Fibonacci targets, and we've got the moving averages and the predictive moving averages. And this was what the scenario that I came up with. We have these Fibonacci targets up here that are suggesting 176 minimum on the upside. And that's a big, big number. That would not be friendly for the Japanese economy. But what's being projected, if you look at these moving averages here, what's being projected is more of stability. And this is a very long-term chart, as this is looking out to all the way where my cursor is here. You see a little white dot. That is way out already into 2029. Okay, so this is a very long-term chart, but what it's suggesting, even in the next 2 to 3 years, that there's going to be more of a stability. Maybe we print up, have some targets, 157, 159 possibilities, and then the 176 is kind of a blowout number. But when you look at this chart, you can see that the US dollar versus the yen, this is dollar yen chart, has been in massive decline, and we can all see that in purchasing power. If you go, this chart starts the very beginning of it, which you can't quite see, is all the way back in 1971. And so as we come into, I recall I came into the markets in 79, and the dollar was pretty strong during there, and then right after that, 80, 82, 83, we just plummeted. And one of the things that I was talking about back in those days, I was an analyst at a major firm, and one of the things I was talking about there is the stock market, if you recall, from in 1980, basically 81, we saw huge interest rates, but once that scenario was over, we saw the bull market start, and we went from 600 to 3,600 roughly, just in round numbers as we go into the 90s. But if you look at what was happening here, just using the dollar yen as an example, what we're seeing here is a massive decline in the dollar. And I was joking back in the day, this was not just against the yen, this happened across the board. There used to be a thing called the Deutsche Mark out there, but long before the euro. And what we were seeing then is, my joke was, you can't discount yourself forever in this rally, that at some stage the dollar was going down, was supposedly giving us, a competitive edge, which it sort of did, but the stock market did very well during this period. And now what we're seeing, some interesting things with the dollar strengthening now, and it's really all it's doing is a retracement here. When you look at this long-term picture, it doesn't feel as catastrophic as it does when you maybe look at a different chart here. Let me just go over here. Yeah, if we start looking at, I'm going to put this on a weekly chart. If we just look at what's going on here, this is interesting, because it feels like the yen is it's over, the end of the world. But when you get the longer term perspective, you start to see more of a normalization. And this has been kind of my theme going back last year. You've been around the channel, this is that interest rates, everything's trying to normalize. And this is why I think the dollar is very strong, but it also, the element here on the Japanese of them being, so accommodative and having basically this zero interest rate policy when everybody else gave up on it. So now maybe there's a price to pay. You can see the short term on here. There are some short term targets that are 157, 161, 163. These are most recent off a daily chart, or this is weekly. But these numbers are pretty substantial. So the reason why I'm spending the time on this is this really matters, I think, to how the BOJ handles this whole scenario. And they've been pretty tactful. I'll have to say they've done a good job at maintaining what they've done. But this is one of those things where we're at a potential tipping point, and if something goes too fast, it's going to disrupt a lot of other things. So I would caution that it could be a minor black swan type situation, where if certain things went wrong, will this numbers do it here? 160, 163. I don't think 163 print would do it, but a 176 print that's on that monthly chart would be very, very much devastating, I think, to the Japanese handling this. And like I said, if they do sell too many U.S. treasuries, then they're going to get in even more trouble, because now the dollar interest rate differentials are just going to get worse. So they're kind of painted into a corner. So my expectations are to moderate some of the catastrophe I'm talking about, is that most likely that long-term chart I was just showing you will end up to be more accurate from the standpoint that we end up stabilizing somewhere between where we are right now, at 151 range to a high end of maybe 157, extremes low 160s if we start to rally. If I bring up the algos just for a second, they are starting to stabilize to fade here. So I wanted to bring this up because, listen, if something happens, none of these algos, nothing means anything, but this is a situation to watch really, really closely. Okay, so I unpacked that pretty good. There's just some things I wanted to say beyond what I said in the Substack last night, because these are things, if you don't watch out for, you could find yourself in a lot of trouble. I think the good news is or if you're on a short-term basis and you're looking at, especially if you're a WaveTech user, you're seeing probably a fair amount of selling coming in. But on an intermediate, I think we're going to see some rotation. When I say rotation, meaning some selling, maybe selling of positions that have been on for a while and kind of refreshing the deck from that standpoint. Okay. Okay, so this is our next plan, and I've got a notebook here. I am going to bring up our Portfolio Expert software, and we're going to build a portfolio of stocks that you folks want to look at. And so don't give them to me yet. Hold tight. What I want to do is I'm going to pick a list that'll be pretty random. Make sure they're domestic U.S. stocks. If you get into too many strange ADRs or anything like that, I know we've got an international community on here right now. So don't, stick to U.S. domestic stocks. That'll be more friendly for the software anyway. So the plan is that I'm going to grab about 20 of those stocks. I will also probably discuss really quick an ETF hack, which I did a while back, and actually I think it's about a year and a half ago or more now that we did this XLE hack, which is the energy ETF. So we'll take a look at that, and then we'll look at that. Then we'll build this other one. I'll show you what that looks like, and then I'll be able to review each one of those stocks, and we'll probably go back and forth between Portfolio Expert, our software, and looking at TradingView to maybe fine tune some of these things that come up. Yeah, so from rotating, typically when I talk about rotate, that's what happens. You'll get an initial sell-off, and then the new buys that start to come in the database will be where the rotation's going. And on, I think FF, you are a WaveTech user, if I recall. If not, what you'll see in WaveTech is there's a CSV file that is released every night on the daily, so you'll see what's rotating there, but also on the weeklies. And I'm working on a program right now to actually get some more transparency for those trades. So let's go ahead and let me just make sure I got things set up here. Yeah, so let's go ahead and, well, let's do this before, let's get the stocks. Let's do the stocks now, okay? So I'm looking for stocks. I'm going to write down these as we go. Wish I had some good music to play while we're doing this. You guys are doing great. you're going to have to give me symbols. Make sure. Let me see what I get down. Okay. I like it. Great diversity here. All right. We're getting pretty deep. I don't know how many of these we'll get a chance to review. Where are we at here? 35 minutes, so we got 25 minutes. Some of these may not be in the database. Okay. All right. All right, folks, I got the list. I'll come back up. So I've got about 20, 21. So I'll bring up the software. I'll tell you what symbols we're putting in as I put them in, and we'll go from there. So let's go over to the software. And this is probably going to be a little tiny on your screen. Like I said, I don't have any way of zooming in, but I'm going to go to what's called our portfolio designer here. And it looks like it's a little stretched, so I'm going to unstretch it just a touch. I think that might help. Anyway, so we're going to build what we call a capital demand model. And what happens here is it brings up a wizard. So I'm going to walk through the wizard, and I'm going to leave most of the stuff defaulted. I'm not going to get too fancy. There's plenty of things we can do. We're going to call this live. I'm going to call it number one, so it'll float to the top of the list. Live stream. And we'll even put a date here, 4-9. Okay, so that's going to be the name of this portfolio. We're not going to go back to 2019. We're just going to go back to 22 here. Let's go to 22. So I'm just setting the dates up here. Make sure I get it. Yeah, so we're going to start at 10/1/22. That's fine. It's somewhat random. Like I said, we're going to leave a lot of this stuff defaulted. And I'm going to crank this thing up to what we call high liquidity. And then I'm going to let there be no transaction fees. And then we're close to putting the stocks in. All right, so I'm going to do something. I'm going to put the stocks in there, both on the short term and the long term. So I'm going to put these in. I'll read these off as they go in. Okay. XOXL, TWST, AXON, MRNA, PBF, MSFT, ADBE, FCX, PLTR, FCX, I already did that, sorry. TSM, then we'll do AMRK, cat, KOMNST, X, CG, NT, CE, Apple, NCND, UPST, and we got to put NVIDIA in there for fun, right? All right. So what I'm going to do here is the way this software works, this is going to match up the models here. So I'm copying this and I'm doing an optimization. So it's going to find the best model for an intermediate for each one of these symbols. So I got optimize weekly. All I have to do here is add symbols, and you'll see the list fill in over here on the left. Okay, so NCND I do not have in the database. Okay, so here we go. We're going to put the symbols in again. This won't make a lot of sense to you, but instead of optimize weekly, I'm going to optimize daily. So I want the best short-term models and the best weekly models. It'd be interesting to see what we get. Okay, and now I'm going to add those symbols. So now you'll see entries over here if this is visible for you. AXON is there on 1.2 weekly and then 1.2 daily. So what I'm going to do now is go next. So we're going to look like, let's see what we have here. We got 40 symbols, so I put 20 in. And so we've got 40, but we're going to trade these symbols both ways, short and long. Okay. So let's go. Yeah, so basically it's figured out in the portfolio, it's going to put about right at 3% is the average. So we're going to generate this. Okay. And here you can see possibly the pink line, it's actually running right now. As soon as it turns green, we'll have results. I've been wanting to do one of these, one of my favorites. Yeah, Jeff, you're just a touch late, brother. Sorry. So it's still in purple. You see where my cursor is? That line, as soon as it turns, it's not purple anymore. That means the portfolio's run. And I'm hoping that I didn't try to do this when our servers are running, because this may be a giant failure if it is. I'm worried that it's not done. This would really, let me come up. So what happens when our servers are updating every night? It goes into a queue and it won't run. So if this thing doesn't come up, this is terrible. I should have done this first because the servers probably started. Let me look at one thing, folks. So I was really hoping this would be really exciting. And that's the problem with this time of day, because we get the data and then we run the models, and it should be done. Okay, it just finished. Okay, I believe. No, it's not done. It didn't run. It's still in the queue. Oh well. Oh, that's so terrible that happened. That's kind of deflating. So for me to fulfill what I just told you I was going to do, hopefully it'll come up by the time we get done with the stream. We're 44 minutes in. What should have happened? Unfortunately, I'm looking at some emails right now, and I'm just looking. Yeah, 1 second. Yeah, it's not going to run. What poor luck that happened. Bear with me 1 second. Yeah, it looks like servers are running. That's what I was afraid of. So we'll go. I'll have to go through these stocks on TradingView, folks. I'll let you know. Now it doesn't matter fewer. The servers freeze. It can't update the data and run new portfolios. So it basically queues them until all of the data is pulled in, all the models are run for and updated for the day. Then it will run all the portfolios, and it's going to run about 5,000 portfolios. Okay, so it's going to be interesting. Yeah, so anyway, that's the way it goes. Bad timing. But we can do one thing, is we can go back up. Let's at least take a look at this XLE. I think it's interesting what's going on right now. We're up about 12.8%, but if you look at the last 3 months, and I know this is ridiculous to see on your screen, but we had in February 1.53 gain, we had 8% in March, and we're up about 3% here on these stocks. And what I'll do is I'll bring up the stock symbol here, and I will go to the open positions, and I'll just show you a couple of these. And this is for Apache. This is just now, we got a buy. This is a weekly buy a couple of weeks ago. It's really starting to move higher. And I'll just review a couple of these stocks here, and then we'll go to the list that you folks gave. Yeah, unbelievable. I forgot the timing, folks. Apologize. So, but a lot of these symbols, I'm just going to go through them. Baker Hughes. There's a lot of new trades that are coming on. Here's COP it's a great trending stock. This thing does a really good job. ConocoPhillips is a really good trader. We've been long on that. We've got Cetera Energy. We got Devon's long for about 4 or 5 weeks. It's doing really pretty well. It looks like the current profit here is 17% on that trade. And we can sort these by the best profit. Phillips Conoco has been long for a while. It's up 39%. I wish you folks, let me know. I'm going to open up this screen. Can you see these values at all? Is this just too small to read? But we've got everything that's long right now in this portfolio is making money. There's actually no losers. Some of them have been on for a little while. We're looking at OKE's been on. It's up about 19%. It's actually in a hold, but everything else is in accumulate. So I know there's a delay. Can you guys see these numbers at all? Okay, yeah, very small. That's what I figured. Okay, so this was a failed effort. Sorry to, but I will show you tomorrow's video. We'll take a look at that portfolio we built, and maybe we'll cover some things there. Yeah, I figured as much. All right, so let's take a look at some of the stocks that you guys actually submitted. We'll take a look at a few of these. We won't be able to get through a lot, but like I said, I will show you tomorrow what this portfolio did. I think I did this stock. I've been there's some guy that I don't know why he shows up on my X timeline, so to speak, but he's a really he's got like 150,000. I don't get it, folks. He got like 150 or 170,000 followers on X. This guy's just like the worst trader ever. I mean, he's worse than Kathy Woods, and that's hard to do. Anyway, so this stock twist, Bioscience, we do have some projections for things to move up toward this weekly chart, maybe up toward the 200-week moving average 62, which would be pretty big move here. Be a double. But let's go to a daily, see if we can get any. Yeah, I mean, it's got a lot of work to do to move out of here. It looks like we've got trying to get some kind of move out, maybe end of May or so, but there's still consolidation. When we look at it back on a weekly, it looks a little better, and looks like we've got maybe a right shoulder setting up that down the road we can get a pretty good move. And we're looking into probably June or something for this one. So let's just keep rolling through these. Let's go through. I'm just going to grab some random ones here. So I like to stick with the weekly trends here. So we got decent, this is a pretty good stock. I would like to know where we're long the stock on WaveTech, but right now. But this upward slope looks pretty good, but the algos are suggesting we're probably going into consolidation. So most of this move has probably been realized here. And you can see when we get out here just to stock, looking at without the indicators, you can see we've got pretty extended move here. And I think the PPMs are in the 1.8, so they were extending, they were predicting for a little bit here that we're going to see an extended move, and that's basically what you got. So we're starting to kind of come in there a little bit. So let's do Tesla. We'll probably go through these tomorrow. So typically on Wednesdays, a pretty short video. So I'll cover the portfolio stuff tomorrow. So Tesla, last I looked, looks like it's trying to push back up. We've had something interesting here that I've noticed, and Tesla's been just tagging this 10-period moving average here. Right here, we hit up on that at 205 and a little rally off the last low. We got through a pivot point, and now we're getting a move back up. And if we look at the algorithms, they're suggesting probably some stability. We could trade back up around 205, 206. It will require that we get above this 10-period moving average to get that going at 181. If we get above that, then look for it. And this 21 is coming down. So right now it's at 206, and it's going to be around 200 or so, 201, something like that, where you're going to get resistance again. And this is a weekly chart, okay? When we go into a monthly chart, every time I see this chart, and I think somebody commented that these negative PPMs, let me put this up here. Yeah, so this is the monthly Tesla, and we've got these negative PPMs, 1690, minus 134. Obviously, it can't go below zero. But let me show you something here and why this calculation is coming out like this. And what's being calculated, and this is what I coined way back in 2007 and 8, the death pattern. But when you get these, let me make this just a little wider. When you get these patterns like this, and you start to, so I could put the pattern finder up here. What's happening from this here to this high, it's projecting this down here and down here. So that's what the projection would be from that pattern. So you've got this monster pattern that's been detected, and now it's projecting these numbers down. This number over here, I'll have to bring it up. I can't see it why the screen freezes when I use this tool, but this is probably the target for this stock. I mean, everybody thought I was crazy when I was saying a lot of the meme stocks. To me, this stock has been so overinflated, it's unbelievable. And I'm a big Elon fan, by the way. It's not about Elon, but it's about. I mentioned the other day that he made a comment that the car business is really bad. Like if you look at Ford and GM, all the major car makers, where they literally lose money selling cars. Where they make money is the really big, the parts that they resell to repair them with. And so just to expect to make money on selling cars is most likely a losing proposition. And that's where Tesla's starting to find out. Plus, the demand for their vehicles are dropping. And I think the public in general, you guys have heard this, so is in general just doesn't really want these vehicles. And I've got one of my neighbors has a Rivian, and that's like even worse than anything. But this is why this pattern gets this negative pattern. But what I saw this pattern back in the day on several major banks. There was one in particular, which was Lehman Brothers. Lehman had a negative projection here. The only time I've seen these projections come out is, I believe, in crude oil. If you guys remember, we went to a negative value on the futures on crude. That was probably a lifetime opportunity to buy that negative value. I don't know. I figured it out when it was too late. But the point is that this pattern is what I coined the death pattern. And typically, there's a couple things that have to happen to actually confirm that this has any validity whatsoever. And I just, one of the things would have to happen, we'd have to take out the 23 low, which is at 101.81. Once that's penetrated, then you're probably heading for this number over here, which is going to seem really ridiculous to you. There it is. Bear with me one second. Yeah, so this number down here is 2675. So that's one of these base periods. If I remember the stocks, I could show you a bunch of the old meme stocks that were out there. We can put out Palantir. This was sort of this was one of them that came out. Let me just. We obviously this was 13 cents. Wait, let me get the right number. $1.72, and it only got to $6.89. But we started seeing these projections up here when the stock was around $16, $17, and back in the day in 2022, I was telling everybody this was the most dangerous stock on Wall Street. The reality is it's a company that's been around a long time, and it got traction, and it's done quite well. So even if you were to run models on it, whatever, there were some good ideas there. But I wish I had the list of stocks I could bring up. So let's put up a daily. Yeah, so Palantir on balance looks like it's trying to stabilize. There's some fib targets underneath there, but this is one of those long consolidations that we've had for a while. So, all right, folks, let me come back up. All right, unfortunately, the effort I wanted to have did not work in building the portfolio, but we did build it, and I don't believe it's it's run just yet. Let me just take a quick look. Because once the database gets updated, it will run. It has not run. So we'll take a look at it tomorrow. And it's right at 8 o'clock Eastern time, so we should see this thing come up here in a few minutes. But I'll cover tomorrow. We'll kind of roll this over till tomorrow. But one of the things that I was hoping to do is to see just what kind of, I love just doing random stocks, just throw them in there, just see how the manager handles very diverse. Those stocks were all over the place. So we'll take a look at it tomorrow and see what comes out of it. And I'm just looking at, yeah. So we'll take a look at it tomorrow. I'm just making sure it didn't run. So we'll call it quits for today. Hopefully we got through some stuff. Yeah, we didn't get to a lot of stuff because of this distraction. So not a very effective stream. The first part of the stream really good. The Japanese part really good. And we'll continue this portfolio building into tomorrow. And I'll do that after we cover. We'll have a lot to talk about with the CPI coming out, all those kind of things. So off we go, folks. Thanks for watching. Thanks for spending time with me. I really appreciate it. And we'll talk to you tomorrow, same time. Good luck tomorrow.